Hey guys, and welcome to the second episode of 1 Minute Answers from 1 Minute Economics, and in fact, the first episode in which I will actually be answering questions. Now, as you can see, we are vacationing at the in-laws, so, first of all, sorry if the sound quality won't be great, and secondly, please don't be scared if the occasional chicken, rooster, dog, or any other animal comes into the frame. Now, first of all, I would like to thank you guys for the warm welcome you've given me last week. I mean, come on, I know I'm not a native English speaker, I know I'm not a professional actor, and I had my doubts before releasing the first video, thinking that it won't be good enough, that you guys won't like it, but the response has been, really good. It's gotten more likes than my videos usually get. It only had one dislike, which is really awesome, so thank you again for everything. Now, that being stated, you guys have asked me 5 questions, with 3 of them being related to today's topic, which is money and banking, so I will be answering them today. Before doing that, however, I want to pick the topic for next week, which is plain and simple politics. Now, I'm doing this because one of the 5 questions has been related to the Brexit, and I do realize that there is a lot of demand for answers to questions about the effects of politics from an economic perspective, if you will. So if you have a question about the Brexit, about how the current political tensions in the Middle East are going to affect you economically, about the situation in the United States, and so on, simply ask me by writing a comment to today's video, and I'm going to do my best to answer your question next week. With that stated, I believe we can get started, and the first question for today has been asked by Mark, who would like to know how a collapse of the US dollar would affect New Zealand. Now, in my opinion, there are 2 dimensions. A serious but not catastrophic one, and a catastrophic one which would result in people losing confidence in the US dollar altogether. Now, as far as the first one is concerned, we can expect, I don't know, for example, something like a 25% reduction of the value of the US dollar compared to the New Zealand dollar. And the losers, first of all, would be, from a business perspective, of course, the exporters, because they are selling products and services in the now powerful New Zealand dollar, and as a result, their products or services would be less competitive. From the perspective of the average individual, the main losers would be those who get paid in US dollars and have to spend money in New Zealand dollars. So for example, if you're a freelancer who gets paid in US dollars and live in New Zealand, then you're going to experience a significant loss in purchasing power. The winners, on the other hand, will of course be on the business and the importers, because, they're now holding chips that are worth more money, and that tends to be good for business. And as far as the regular individual is concerned, the main winners will be people who get paid in New Zealand dollars and who, for example, have to buy something expensive, a product or service that is priced in US dollars. The second dimension, which would involve a complete loss of confidence in the US dollar, would, in my opinion, have devastating consequences for all of the other currencies as well. And I just don't see how it would work if the dollar were to collapse and everything else, would just function normally. I'm sorry, but I, for one, just don't see it. I think it would be a true and utter disaster for absolutely all parties involved. And I think we can now move on to the second question, which was asked by Pavel, who would like to know how you should go about choosing your day-to-day bank. Now, this time, again, I believe there are 2 dimensions. What do you want to do with the banking question? One dimension is, simply choosing a bank for lots of day-to-day transactions, but not a bank you keep significant amounts of money in, on the one hand, and on the other hand, the second dimension would be choosing a bank in which you keep your significant saving. Now, when it comes to dimension 1, just focus on whatever it is, makes your life easier. Pick a bank with branches all over the place, with a good internet banking system, with banking products like credit or debit cards which function properly, and so on. So again, focus on the customer service component. When it comes to the second dimension, and when we're talking about your wealth, I, for one, would worry about one thing and one thing only: security. Customer support is now, and anything else in that realm is now secondary. And in fact, I would strongly recommend choosing more than one bank. Ideally, you should work with, 3, 4, 5 strong banks which complement one another nicely. And by doing that, you're going to spread your risk across more banks. And should something happen, like in Argentina, where the authorities say, you know what, we're only going to let you withdraw $100 from the ATM machine per bank, you'll obviously be in better shape if you have money with 4 banks and can withdraw $400 daily instead of just $100. So, Dimension 1, customer support and everything that makes your life easier, customer service, the whole shebang. Dimension 2, security. That would be my perspective. And that brings us to the final question for today, which has been asked by Mike, who would like to know what I would recommend for the average individual: a large national bank chain or a credit union. Now, again, it's all a matter of figuring out what works best for you. The main pro of credit unions is the fact that you're probably going to get a better deal. With credit unions, being not-for-profit entities, you're probably going to get lower fees, better interest rates if you want to keep your money with them, lower rates if you want to take out a loan, and things like that. And the second important pro is the fact that credit unions just have an overall friendlier feel. I would say that your customer service experience is probably going to be better. You're going to feel more a part of the community and so on. And, a lot of people place value in that. However, large national chains have their pros as well. The main one being the logistical dimension, because they have branches all over the place. So there are workarounds with credit unions as well, but there's definitely value in knowing that no matter where you're traveling, your bank is going to have a branch there. And I would say the second pro of large national bank chains would be the fact that they tend to be superior from a technological perspective. So they're probably going to give you better internet banking services and things like that. So I would say that, for someone who conducts business internationally a lot, for someone who, for example, has to send lots of international wire transfers each month through internet banking and things like that, it's probably a better idea to work with a national chain with a national bank chain. And again, it's all a matter of figuring out what works best for you. And on that note, I'm going to end today's video, but will not stop until I remind you that the topic for next week is politics. So if you have any questions at all about politics, feel free to ask me in the comments, and I will do my best to cover them from an economic perspective, of course, next week. As usual, please try to be active in the community, to comment, to like my videos, and so on. Of course, to subscribe to 1 Minute Economics if you haven't by now. And those of you who want to support the channel financially as well can head over to 1minuteeconomics.com, where you can find detailed info on how to do that. Thank you again for everything, guys, and have an awesome weekend.